The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tuesday edition. Of course, I almost said Monday, but it's Tuesday because we had holiday yesterday, and in fact, it is the 18th of February. And little flakes coming down, just starting to come down yet again in the Boston area. Unbelievable, especially here in Newton. We seem to get more snow than most people. All right, let's just go straight to the nitty-gritty. Thank you, Steve, for 2 great hours. You've got the E-mini. 1840.25 was the high at 5:15 this morning. 5:15. Must have been last night. 5:15, couldn't it be? 17:15 time right now. What happened? Yeah, on the 17th, the high was 1840.25. Today's the 18th, and the high is 1840.25. What does that do in the Chapman wave methodology? It says we are still from February the 5th, where the low was 1732, round number low. We are still in leg A. No, we are not. The E-minis, the S&P March future, is still in leg A because it made a parallel high bar today. The stochastics at 95%. The MACD is very good. We're about to confirm a Chapman wave squash in between the MACD and the slow stochastic. One of the reasons why we went long last week, midweek I think it was, the 300% long, the S&P, is for just one simple reason. The technicals, the takeoff, everything about that opening gambit was so powerful that I had absolutely no choice but to consider long positions and only long positions. Now, this is even more important. When I'm looking at the 120-minute chart, that 1840.25 has created a rectangle formation. It says, yeah, I could come down, but not until I've hung around here long enough to frustrate everyone and go sideways for a good few hours. And that's exactly what's happening. So let me run the numbers. Let me get rid of this. Got it. I'll do it because it's the beginning of the week. I'll do it as we're moving along. So INDU. The Dow right now is trading at 16,143, down 10 points. A little bit of weakness at the opening, was down 40-something. And this very well, I'm expecting that, in fact, we do make a peak E, a peak A, the first peak from the low bar of the 5th. In the Dow, without going to a high above 16,175.55. We're only 33 points away from getting there, but that's just the way I'm looking at it right now. So the stochastics at 87% in the MACD daily. The weekly is not that good. Monthly is tremendous at 92%. Let me just go through this very clearly. I'm prepared to change. And I'm prepared to change quite drastically any trend that I see. Yes, if you want to send me emails saying, oh, wait, last week you were negative and now you're positive, our positions tell the story. We have long positions and they're doing very well. And as long as they do very well and they are essentially telling me more about the market than anything else, I will stay in that position. Will we break to 16,589 to make a new all-time high in the Dow? I don't know, but if this is leg A, I suspect that we're going to see higher prices. We've been trying to buy. Missed by a penny the other day, a stock that did really well. It's fine. Missing is as good as, well, let me put it this way. I don't like missing. But missing is not bad if you're on the right side of the trend because it tells you you're okay, you can do it again, you might not get that same price. All right, let's go on. So the Dow is now up $1.21. I have to tell you, the more charts I went through this weekend, the more positive I became. And I'm going to just run these down now because it's so important. The support in the Dow is at 16,050. I would say worst case basis any day this week would be 15,970 to 30. I don't think this is the week that it happens. I do expect that maybe sometime this week we get a really sharp pullback. I got a feeling that the 16,000 is going to hold at this particular time, at least on a closing basis. Most importantly, the resistance is that candle, that very ugly candle of the 24th at 16,203.29. So that's about 50 points away from where we are. So that's really what I'm going to be looking at. The S&P, SPX.X. So let me just sum it up. I'm very positive. I love the fact that the Qs went to all-time high. Sorry, I shouldn't say all-time highs. They're way, way under the all-time highs. Went to new recovery. I think it's 13-year highs or something like that. Absolutely. Really good. Now, can there be a double top formation? That's what we're going to deal with. The Dow still has quite a way to go to get to the double top, not the S&P. S&P is at 1841 right now, 1841.02 up 239. And the all-time high is 1850.84, made on the 15th of January. And the weekly chart, if it does make that new high, I will relabel that. I'll call it G/A, because I don't see how I can call it anything else at this particular time based on the Chapman wave methodology. But it means that the monthly has actually gone to leg E. That is that pattern that I was looking at. I'm going to do a little jumping around here, if you don't mind. And the only reason is that I want to explain what I'm looking at, why I'm looking at it, and why I'm looking at it. Because I want you to feel that the analysis is based, if I can find it, where did it go disappear to? Monthly. The analysis is based on the historical content of what has happened previously. And historically, when we've gotten to a peak D, after a very extended move from C to D, that's the only time it happens, C to D, you can go to E. You've got to be real careful when you get to that E in the monthly chart, but it can extend a little higher. But it says that the very quick decline from a D of 1 month, maybe 2 months, and then in the monthly chart of the S&P, you go to a new recovery high. You've got to anticipate that you're starting to get extremely overbought. Now, we're going to talk about something else. Just while I'm doing that, I know there's a lot of talk about this. We missed going long this particular index, and I'm really furious about it because I wanted to be long because I believe that the iShares of the NASDAQ Biotechnology ETF, we were short, we were long, we were short. Meantime, I tried to go long just recently, and it didn't quite work. But look at this. It is trading now at 264.09. I believe, and leg E in the weekly, leg F/B in the monthly, I believe that there is a chance that we are in the process of making an extremely sharp move to the upside, what I call an hysterical coda in the IBB. And that says it could go quite a lot higher before it actually comes down in a kind of a collapse. I don't know if it'll be the end of the IBB. I don't think so. But it'll certainly be a very sharp decline. And meantime, the low of 232 just recently, back in February the 5th, 232.93, we're trading 30 points above that. That's about 12%, 12%. So all I'm anticipating is that there's a chance with the extension of the IBB. My target had been that there'd be a push if it broke out to a new recovery high above 254.11. 259 to 263 was the target. Well, we're at 264.20. We've broken that target. And now I'm going to do this because I think it's so important. I'll go through all the numbers. Look, GE is trading right now at 25.75. Nice move, not great, but it is nicely above the up channel support, the buy zone in the Chapman wave methodology. It's called the inside track of the channel. In the weekly and the monthly so far held the 9-period moving average very nicely. This is my Dow quartet. IBM had done really well, coming off what looked very ugly, but it's a pattern that I call the Chapman wave flat base restart. And what's happening now is exactly what you expect. You break above you make nominal highs as it keeps coming back to test, in this case, the low of 177.35 from January of last year, of 2012. But it, excuse me, it doesn't break it until it's completed a peak E, in this case 215.90. Then it powers down. It breaks that low. It goes to 172.57, tries to rally, gets repelled to the 9-period moving average, and look what happens. Goes to 172.73. That's a nice H pattern, successful H pattern. It says it can rally, and it can rally to test 190.81, which is the resistance of last month at the high. That's going to be the target on the upside. We'll see if it actually gets there. The other thing that I'm looking at here is Triple M, which was an absolute leader last year going into the December 31st high of 140.43, has made a peak E. It's held the 9-period moving average. MACD is good. Stochastics at 92.25. The weekly chart is just testing at 132.19. Is testing the, let's see, why is that on? I don't want that on. Let me just get rid of that if you don't mind, because it's confusing. Moving average one line. I just want to, I don't want the alert to be on. Style. No, it's not on. Why is it showing that? Skating. Oh, okay, it doesn't matter. Anyway, so we're looking at 132.17. That's right on the 9-period exponential moving average. MACD and the stochastic and the weekly are not that good, but the daily is at a very nice run from the 123 area right up to today's high of 132.70. 132.77. So that's very important. It's acting well, but not great because it's got a long way to go to get to 140.43. You've got UTX, my pilot. Well, it's a pilot light in the intermediate term. My actual pilot light really is General Electric. Used it for a long, long time, and it's been fantastic at telling us about turns in the market prior, at least a day or two before they've been happening. 113.71 on UTX, and it is it's made a peak E in the daily at 118.20. It stumps to a round number 107, a round number low, right on the 5th of February. Now it's trading at 113.73. Good action, not great action, but really good action. And the weekly chart is improving a lot, and the monthly chart is still fabulous at 93% in the stochastic. So you can see, when I went to look at Caterpillar, when I went through these charts, I'm saying to myself, I don't see anything bearish here. Stochastic on Caterpillar is at 95%. What am I looking at here? Maybe I'm wrong, but I love what I'm looking at least in the shorter to, I wouldn't even say intermediate term, but at least in this particular phase, I love what I'm looking at. So let's go on. We've got gold GCG 114 trading at 1322 up 3. I had said to subscribers that it could be making a leg E to a peak E, but what's really important is the first time it's testing the 200-period exponential moving average at 133.33. So I like what's going on. Stochastics at 96%. This is really good action. I see nothing. Yeah, I would love for some extrapolation of data to make the gold market really weak just for a day or two to really slump. Get down to the 1290s.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and let me just quickly finish this 120-minute chart. Yeah, this is leg B, I think. Whoa, leg B in the Qs. 120-minute chart. Yeah, let's go on. So we had gold, we got silver. If you don't mind, I'm just going to look at SLV because that's really quite an important one. SLV right now, oh, man, I have to tell you, some of these charts are just stupendous, just fantastic. SLV is at 21, targeting the 200-period exponential moving average of 2117. It is only in leg C up in the, that was an overlapping wave, so it's very powerful. Should take you to at least the 2117 is a 200-period moving average. It hasn't even touched for, a year now? No, what am I talking about, a year? It hasn't touched I can hear footsteps. And that would be right since the 7th of February of 2013. Wouldn't that be over a year ago? Yeah. So that is incredible action, coming back very nicely. Now let's continue. And so silver is right now trading at, let me find it, because the GLD is at 127.47, acting very well. Gold's up 390 at 1322.50. Silver is up 40 cents at 21.82. And the high-grade copper, let me go to high-grade copper right there, HG. Acting, oh, what a nice move. Leg D in the daily. Man, I tell you, this is a serious market, folks. Don't get on the wrong side of this market. That's all I can say. You can be out of it and watching. That's okay. I don't think it's okay, but yeah, it's better than being short and wrong. That's just my attitude. And at some point, we will be changing direction. But right now, there are many of the sectors that are just doing fabulously. I'm going to go to same group of stocks. How can QQQ on January the 2nd be peak C and can't be peak E? Oh, that's a good question. I'm not going to get to it right this very second because I've got people lined up to call in, and but that's a question I will answer shortly. And FSLR, as I'm going to our first caller, FSLR is First Solar. This is a very strong leg. A up in the. I had all these down. So A, B, C. This is peak. D in the monthly. And you've got yourself a nice retracement. First Solar is at 55.25 FSLR, and it needs very much, it's acting well. It needs to hold any support and any weakness at 52.11 on a worst-case basis, but very near term, 53.15 area must hold, and then it's got to tackle the gap, and then that bar of 57.59 on the 3rd of January. That would be really stupendous action in First Solar. Let's go to George in Atlanta. George, how are you?
Hey, Basil, it's Tony Mahan, actually. I wanted to ask you, do you think this Mercury in retrograde and quality volume will put some pressure on this 850 anytime soon?
It was a little fuzzy. I wonder if you could just ask the question again, if you don't mind. So, did George just disappear? Oh, my. I got the question was, maybe my engineer can just repeat it. Got a little fuzzy there. I also had a little grandchildren. What was that, a crank call? Okay. Gee, I don't even know what he said. And I got, if I see you guys one more time, that's my little grandchildren. So we'll see if we can get this heckling. Listen, if I've got grandchildren heckling, a caller heckling is really the least of the problems here. Something about Mercury retrograde. Yeah, I like that. Thank you. Yeah. All right. So I don't know whether he was talking about Baidu, and I don't know what he was saying, and fortunately it was a little fuzzy. So maybe he was insulting me. I'm not sure. I can handle that. So let's move on here, because it's really important. If you've got silver acting really well, you've got gold acting really well, and this is the issue. High-grade copper, I just want to get back to that just to show something that's quite important. It's been in a trading range, and I've been considering that the high-grade copper, like the TLT, that's the Lehman 20-year T-bond fund, is stuck in a trading range. Like the dollar, basically is stuck in a trading range. I don't see how you can, unless you're intraday trading, I don't think you're going to be making much money in any one of these things right at this particular moment. We could be getting to some kind of a climax within. You realize that if this is still leg E, I keep saying E, leg A, in the and even if it's peak A today in the S&P and the Dow, you've still got leg B, leg C, and leg D to go, and that's quite a while. So we've got to be real careful. Now, I have to also try to listen for my music here. Yes, there's the music. I can hear it. I want to go through a couple of things here that I consider to be very important. I want to look at, there's been a lot of discussion between 1929 and now. I did a lot of work on my work of the 100.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Dow's up 5. S&P's up 3.78. If you're scratching your head and you're wondering what on earth is going on with this market, there are a lot of things that are going on. We've got the rails down. We've got we've got a rotation that's been going on, and if you don't identify these rotations early in the cycle, then sometimes the best move is just out of the gate, as they move out of the gate. But within that context, there are stocks that have good chart patterns, might be in an area that's viable at this particular time, and in a sense, you've just got to do your absolute best to handle the trade. For instance, we bought a stock, DAKT is the symbol, Daktronics Inc., a stock that goes back, way back. I've never really followed it all that much other than to say, when I see it rallying, I always say, oh, man, that's one to watch, and then it's off my radar. This time it started a really nice move. It went down to 1343. I think it was on the 5th of February. Only reason why I want to discuss it on the 10th of February, the reason why I want to discuss this is as part of strategery. It's part of what you do, the art of not just assessing charts, but the art of not just reading charts, but how do you handle situations that come up that differ from your intent, but don't really differ from the chart formations that you were looking at. Let me explain. We bought this stock on the 13th at $14.12, and that was one of my very rare intraday follow-ups to my Traders Corner. That's my opening call is my newsletter that comes out every day starting very early. I send out the Dow chart. That's this chart over here. Let me just show you with a tremendous amount of detail. And there's the 120-minute chart. This chart here with a great deal of detail, how I'm looking at it, what channels, the left side, right side, price time match, maybe a cup, maybe a V-shaped pattern, the Chapman wave inside wedge, all sorts of things that I teach as every single day. And we follow it live. This is very often our trading. We might be trading the Dow, we might be trading something related to it, the diamonds or something, but it doesn't matter. The work gets done every single day. And then within that context, we look at all these other things. So I'm looking at a chart and it says DAKT is acting so well. It seems to be, I should really have asked our resident technical guru, Dave White, about this, but they seem to be in the area that's doing well. Display systems for scoreboards and for weather. Now, I looked at this and I looked at the monthly chart and I thought, aha, we've seen so many cup formations and W formations that there is a chance that this peak C that was made in the monthly chart could very well be tested with a move above 1609 to make leg D. If it does that, then 1640 would be the high of December of 2010. And if it succeeds in that, you can even see a test of the doji candle back in June of 2008 with a high of 1992. Now, that's looking out. I just go one step at a time. And what I really love is that this chart was holding well. On fairly weak days, it still seemed to show inner strength. Now, there's really no volume. I'm not recommending anybody actually take this on right now. If you didn't get a really great entrance, it's kind of tough to do. Look, last week, it was only, the whole month was only 769,000 shares. But that's not an issue. I'm not really bothered by that, except sometimes you can't get out and you can't get in at your price because you have to wait for an appointment to get out. But that's not the issue. The issue was that it was acting well. It was leg A. The stochastic was moving. The MACD was moving. All of a sudden this morning, I see it trading at about $13.59. And I thought, what on earth? Did I forget to look at the earnings? I thought I looked at the earnings report. Well, it turns out the earnings report came out this morning. And I looked at the earnings report. It looked very good. But the stock was down, but there were only 30 shares and 50 shares. It wasn't anything much, the total, not even a total of 100 or 200 shares. So I said, you know what? We're going to have stops, two stops. One is at 1350, another one at 1340. And if it does certain things, we are going to raise the stop. And one of the things I thought of, and this is just like a lesson for you, by the end of the day, you could give it all back. I don't care. What I wanted to do was just to show you something that I consider to be important, that sometimes if you do a little work on the earnings report and the expected result and the result that the market is showing, in this case down about 4% or something, I thought, you know what? By mid-session, we could be a little bit higher without being stopped out. Well, it turns out not only a little bit higher, we were not stopped out, and the stock jumped to where the 200-period exponential moving average on the 120-minute chart, which was 1458, and what was today's high? 1460, and it's trading now at 1446. As I say, by the end of the day, anything can happen, but I wanted to go through the discipline of saying, don't get stopped out. Let it come to us a little lower down in two positions, because there's a chance by the end of the day, and this is telling me about this particular market, a stock like this having been weak earlier on. If the market was very weak, it should have actually, even if it was going to be strong, it would have been pulled back by the market. So this is one of the things that I look at. How do individual stocks react? How do they act? Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, how are you doing today?
Very well, thank you.
Hey, Basil, I was trying to go short the SMH, and I'm seeing that slow stochastic is like 99%, and I was trying to use the X or XS. The direction says short, but just for a quick trade, what do you think about that?
All right,
I think
this is what I'm going to say to you. I believe I almost went long the SMHs because we missed a stock the other day, just missed it, and it took off like unbelievable. AMAT, which is Applied Materials, they're the leaders in the sector. and they are acting extremely well. I don't know what's going on there. All I can say is that there's that pattern that I was looking. You see patterns repeat. So the DAX, the Daktronics pattern, there's that H that turns into a soft W formation, and it broke out. That's what I'm hoping is going to work out with DAKT. But in the meantime, AMAT Applied Materials has already done it, and it's broken out in the cup formation in the weekly. I have to tell you, if you want very short-term trades, there are some stocks that are showing some weakness. I'd rather go, Freeman, I'd rather be looking at the weakest stocks for a quick pullback than the strongest stocks to play a counter-trend rally. Because what you'd be doing is you know how I always talk about a piece of driftwood, if you throw it out and the tide is going out, that driftwood is not going to come back to shore until the tide changes. If the tide is coming in and you throw a piece of driftwood out, that tide is going to keep pulling that back to the shore. That piece of driftwood will get closer and closer to the shore. So I would not be looking at this, oh, you might get a real quick intraday, but I'm looking at this and saying, today the SMHs are at 43.26. What was the high Friday? 43.26. What leg is this in? Very confusing in the sense that it went to oh, that should have been EFG. That should not be. All right, made a mistake in the daily. That is a CG, and in fact, it turns out to be a G. And now you started a brand new A. I can't call it anything else but leg. Do you understand, Freeman? What I've been talking about for the last few days is that I've got chart patterns that are forming in my daily charts, like the QQQ. Oops, AQQ is not what we wanted. Let me just do that again. A. And if you're going to play a counter-trend move, I would rather say to you the benefit would be to have a little patience and buy instead of shorting. Rather wait for the dip and then start maybe two positions. A position, so I'm looking at the Qs. I can't call this anything else but leg A. I'm just stuck in my Chapman wave. That's the way it works. And that says to me, don't be messing around with counter trends. No, 95%. I've got 95% in the slow stochastic in the daily. And the MACD's expanding. And I've got the 120-minute chart. I didn't catch up on this. I meant to do it, and I didn't. Very strong walk in the 9-period moving average with 43.05, the first support. And the next support is at 42.85. I'm going to make a suggestion. I would rather see you try to nibble at 42.80 and 42.55 with a 42.30 stop, because there could be a pullback over by this afternoon or tomorrow. There could be a pullback, and then I could see it going higher. So I'd rather, if you want to play the down move of maybe 50 cents to a point, that's okay. But the speed with which we could go onto leg B is really the issue here. So I'm looking at this and I'm just saying, wow, I'm upset that I'm not long the SMHs. I don't know how to put that into the pie, but that's the way I'm looking at it, Freeman. So I'm going to suggest, at least in my work, I would not be shorting, even if I saw in the 120-minute a chance for a pullback. I'd rather be considering the other side of the trade, and that is to possibly be buying a position on the long side. Look at the IBB. The IBB is in leg D in the daily. And it's showing no signs with the stochastic in the daily at 94% and the weekly chart at 88% and still expanding, and the daily at 96, the monthly at 96%. So I'm looking at these different sectors, and I'm looking at sectors within sectors, and I have to tell you that this is a stealth rally. Nobody believes this stuff. I mean, you can listen to you can listen to CNBC, and there are a lot of people saying this is a little too much too soon, and we should be pulling back, and the market just seems to be ignoring them. Good news, someone said in the den. Good news, no, Terry said bad news is good, must be a bull market. Actually, what happens is bad news is good, and good news is good. So it's actually looking very nice. And if you look at Toll Brothers, Toll, let's see, should be a leader in the sector, and it is a leader in the sector. It's starting to bump into resistance, but it looks very much like a 37.38 TOL wants to test 39.26, which 39.25, which is peak C, to make leg D in the monthly. So I look at different sectors, and I keep seeing some signs of strength that are not just out of the ordinary. They are follow-ups after a great takeoff that we had just a couple of weeks ago. So I'm not looking at anything other than very short-term weakness, and I do think that in the next day or so we could get a sudden bad news thing that actually drags the market down 100 points or 150 points and looks really ugly, but it's only for a day or two. Freeman, that's my recommendation. Step aside.
Thank you, Basil. I appreciate that.
I don't think it's worth the trade if there's still internal strength.
Got you, Basil. Thank you very much.
Thank you so much for calling. Always appreciate it. Let's go to Victor in Paramus, New Jersey. Hi, Victor. How are you?
How you doing? I'm looking at a Coca-Cola. It's the same price it was 3 months ago when
Yes.
the earnings came out. I want to look at that one, and T, the letter T for Bell.
So these are defensive stocks, folks. When I say defensive, I don't mean in the defense area like Raytheon or LTD. What is that? No, LMT.
The point and figure chart says
Lockheed
it's
Martin.
45.
I'm looking at something that's. This is one of the few instances that I really can't give it anything else than a leg A that failed at 41.39 for Coke on the 31st of December, the last day of the trading year. And right now it's got the pattern that I call the H formation. It looks very much like it wants to come down to test the 37, what was that, 37.10 area. That 37.10 area, if it takes it out, it says in the weekly chart, be careful because the next level of support is 36.83. And the monthly says, remember the gold chart? This is looking like the gold chart. So do you have a position at all in Coca-Cola?
No, I was looking at the slow stolastics that are like 20 right now. Is that good or bad?
You know, the weekly stochastic is at, I've got 19.13. You could have maybe have 20. Yeah, so I don't like that at all. That's deep weakness, and the MACD is still good. And I have to tell you something. I looked very closely at these defensive-type stocks, and that would also include, say, Clorox. Now, probably don't have the notation here, although I've done all the work. Peak D, Clorox running a little bit. I'm watching these in Procter & Gamble, PG.
Yeah.
You want to telephone as well, another
KO.
defensive stock?
In KO, you have a big high-volume day in, like, September of 2012. Is that what it's trying to backfill?
Which one?
KO, Coca-Cola, in like September, October,
So,
and the weekly chart is a big, looks like a middle finger.
Yeah, what I'm looking at, I think the same as you. You're looking at these are defensive stocks, but you are looking at it as possibly something to buy
with
for
a
dividend, or just is this just a question as to what am I looking at?
No, with a dividend. I'm looking to get a little dividend, but I don't know. It's retesting that number
Let me just make this as clear as I can. I never buy dividend stocks for the dividend. I buy them as great stocks that are going to move up with capital appreciation, and then I would like to get the dividend as a bonus. It's the wrong thinking to buy it as a dividend stock, and I'll explain why. If AT&T at 32.81 goes to my target price of $29.97 over the coming weeks or maybe a month or two,
you're talking about AT&T, right?
That's 3 points. That's not going to make on your capital if you're going to lose 3%. No, you're going to lose 3 points. You're going to lose almost 10%.
Yeah,
your dividend can never make that up. Hey, can you hold on?
Yeah, sure.
We'll be back with Victor in Paramus, New Jersey, looking at these dividend stocks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Victor in Paramus, New Jersey. The Dow's up 2, S&P's up 3.47. And so, Victor, what I want you to just, in the rotation aspect of the market, as I look at it, I looked quite closely at the turn up the other day, and to see whether or not the defensive type stocks, these are the dividend stocks, were actually performing. My looking at the market as it stands at this particular point, I see that the cyclical stocks are actually doing a lot better. So I'm suspecting that the Cloroxes, the Procter & Gamble's, they could participate a little bit, but they aren't going to be the leaders. So when I'm looking at Coke is one of the weakest ones, like Pepsi. Let me see if I can find Pepsi. Pepsi right here. I cannot believe that I have no notation on Pepsi. Well, thank goodness TradeStation's trying to figure this one out. But I've done Pepsi, I don't know how many dozens of times. But Pepsi is also starting to pull back very sharply here. The last move was an A, B, C, D, peak D, right there, July of 2013. I think Pepsi's in the same category. So, Victor, I'm going to recommend don't buy the dividend stocks, for the dividend, if your 6% or 4.25% dividend is going to give you a loss, your capital loss of 3 to 7 to 10%, because that's really much more difficult to make up. That was really the point I wanted to discuss, that buying it because it is a good-looking stock allows you to get the capital appreciation plus the dividend. Buying it because it looks like it's a great dividend stock, yet the chart is not good, means that you are vulnerable to capital losses, even though maybe in 6 months' time it comes back strongly. I don't like to be in that kind of position with a stock pulling back, especially when it looks like it's topped out and it's going to have a good couple of months of weakness. So I hope that helps you.
Where do you park your money then? In Twitter? Where are you parking?
So in terms of parking your money, at this particular point, well, Twitter, of course, you're going from the exact opposite. Twitter would be something that is essentially completely different to the chart pattern that you'd be looking at if you were looking at dividend stocks. But at Twitter actually might have a little bit of something, but I would look at stocks like a GE. I would look at a stock that has dividend plus a trend that at least at this particular point looks like it wants to move higher, and I would put a stop on GE. Say I wouldn't put all my money, but I'd take some of it, treat it as a bit of a dividend stock. And I would say for the dividend, I would not take it's at 25.75. If it broke under 24.80, I'd be out. So 1 point stop, and just leave it as a stock that has the potential over the coming couple of weeks at least to move higher. It's a better way to park it. But cash is also good if you want to park. I just wouldn't put anything in where I'm looking at capital depreciation.
Do you use point and figure charts? Do you use point and figure charts? Like on that one, it says it's going at 29.50. I do. I don't. I'm not updated. I almost did it this weekend, but I kind of ran out of time. But on the next couple of days, I'll do a little bit of point and figure work, and maybe we can talk again, okay? What's the big and black on GE? You have a light volume today, and it's a big black candlestick. Doesn't that mean like it's at the end of the trend? It looks like it's tiptoeing to...
no, it could just... no, well... I'd be surprised. Well, let's wait until the end of the day on GE. The day is young, but I think you might be right. But I'm looking at GE right now as at least showing some kind of internal strength, and I like that. So, but parking money, that's, we're talking about something a little bit different. To have a portfolio, if you're looking to get out of the market and park, that's different. To having selected issues with selected stocks. Maybe we can talk about that again, maybe a little later in the week. Thanks so much for calling, Victor. I'd like to speak to you again. Folks, stay tuned. You've got a great options hour coming up, and I also want to tell you to listen to all the shows today. Great program. I'll be back at about 4:20 this afternoon for an interview, and the Dow right now is down 7. I kind of like what's going on. I'll be back later today.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.